So in a way, that's funny actually.
I mean, it sounds like
Kind
price fixing to me.
of,
Like, it sounds like they're just going to be like, lol, we're just not going to sell anything until they pay us what we want. Like,
well,
come on, that's not how it works, though. Other
no,
people,
are you kidding me? That's totally how it works. That's how it works in just about any commodity trader. Like, there are people who in the oil market actually have storage tanks that can receive delivery.
wow, everyone, wow, what a crazy earnings week in the market,
Yep.
filled with just profits on profits. Hey, speaking of profits, if you like profits, go ahead and smash that like button, please. Because I like profits too. We all love profits. And you know what? Hitting that like button, it's all about liking them profits. So go ahead and hit that for me, please. All right, thank you. So, Spence, what do we got going on today in the market recap? Going to take a look at some futures?
You got it, man. Yeah, we're going to take a look at some futures. I'm going to run down a couple quick charts and cover some things that I thought were pretty interesting. A little bit of news, and then you're gonna hit us with some earnings info. Yeah.
Yeah, definitely. I'd like to take a look at some of the earnings. In particular, I'd like to really talk about Facebook today. But hey, real quick, I wanted to point out to our viewers, why do you look at the futures and not the actual SPY or the QQQ and all that stuff that like everybody's used to trading, like swing trading or just using it as like an investment instrument?
Yep.
Like why futures?
Yeah, so futures is the S&P 500 futures are essentially, they represent the same thing, right? The top 500 companies in the index. But instead of being an instrument, so the SPX is kind of the larger version. The SPY is the ETF that is represents the S&P 500, and then the SPX is the index. The futures, however, are, I'm not going to go into how futures work here, but essentially why I use them to represent, looking at the daily bars or any bars for that matter, is because they are continuous, meaning you'll often see the SPY or the SPX open up on a gap up or a gap down, and there'll be some time, there's be some gaps between the daily open, the open and the close every day. Whereas the futures, you'll see all of that action play out without any gaps because they're constantly traded. They're traded 24 hours a day, 6 days a week. And so you're going to get more information out of looking at that chart.
So basically, if our viewers want to sort of see where the market's going to go, so if they're watching the early market trading hours and they're trying to get a good understanding of like how it's going to gap up when early market trading hours open, they can actually look at the futures market and try to get a good understanding of the movement ahead of time.
That is correct. Yep.
I see. Okay.
Yep.
So
that's
all right.
why I like to see.
Yeah, let's go switch to the chart.
For sure.
Alrighty.
Okay, cool. So taking a look at how the week ended, we had actually, so we saw that tax plan introduce a little bit of volatility back here, the tax plan announcement from Biden, and then really nothing happened. It got even quieter. We had a kind of a little move up and a little move down, right?
You think that's because of earnings? Is earnings, like I remember last week we had sort of that whole options expiry kind of, overcompensating for the whole Biden tax plan. And now this week we had pretty much all the biggest companies on the planet putting out earnings, and all the earnings were great.
Yeah, if there was ever a reason to wait to see what would happen, it was earnings. And so you had some interesting earnings. But what's interesting is that you had this reaction on Friday where the market was down. And so we really don't have any new information. We're pretty much where we were at the end of last week. And so you can see here we have our momentum is starting to fade a little bit. It's getting back to this level that we have here. But really, we just need some more information. And again, earnings is now being digested. There's obviously more to come next week. So, there's just not a whole lot going on, So next thing that I want to talk to you guys about is going to be, we're going to look at so what's interesting about from the futures perspective is if we look at volatility. right? So you can see volatility is starting to pick up a bit here. And I want to remind our viewers that when you look at the VIX, you're not looking at the realized volatility, you're looking at the implied volatility. That is the price set on volatility by the dealers who are selling options, okay? And so what's really interesting, go ahead, Jeff.
Yeah, I just wanted to say, I think we're going to probably need a little bit more explanation for that one. I don't know if our viewers may understand 100% what you mean by that. Is there any way you could more accurately split those two, kind of define them better?
Yeah, absolutely. So you have, what is volatility? Volatility is it's how much it's moving up and down. The volatility will measure that. And so what realized volatility is, there's two types of volatility that are relevant here. Realized volatility and implied volatility. Realized volatility is the actual movement. It's historic. You can see it on the chart. Right?
Got it.
Now, the implied volatility actually comes into play with regard to the options market. When you look at options, they have several components. You might have heard terms called Greeks or something like that. But essentially, the implied volatility is based on the options price and a couple other factors. The implied volatility is what the expected range of the move could be in the future rather than in the past. And so the implied volatility is right now at 18, and the realized volatility is at 10 or 11, closer to 11.
How do you see the 10 or the 11?
Yeah, so we can see, so we have this fun new instrument that was released fairly recently. It was like late last year, I think. You have the VIX, which is the implied volatility on the S&P futures, or S&P 500.
Right.
You have RVol, which is realized volatility. So it's the daily close, and it's the realized volatility. So you can see here, it's actually quite different. So what's happening in the market, realized volatility of 11, which is very low for the S&P 500. But you have an implied volatility of 18.5.
That's really interesting because you would think that would evolve VIX of 18. I feel like if you look back historically on your chart, a VIX of 30 and above is everything's going crazy, right?
Correct.
Yeah. So a VIX of 18 historically seems very stable. Seems very stable volatility. So why would you say it's so different? It seems stable to me.
Yeah, well, because what's happening here is, we'll take a quick look. You can see that the spread, the volatility, the actual volatility is going down. So I have this here, what we're looking at right now is the VIX minus the realized volatility.
Interesting.
And so what you see here is that what's actually happening is that the implied volatility is going up while the realized volatility is staying flat or going down. So that means an expectation for a bigger move is starting to build. That's my interpretation anyway. And so what is interesting, one of the ways to watch this is when this spread gets really big and the implied is really high, that can generate signals for trading. And one of the things I'm going to do in a separate video is to basically use the realized volatility, implied volatility, and volatility of volatility to do a bit of a study and see how we can navigate the market using those measures. Because this is a big deal that a lot of big shops look at, and it's important to be familiar with, at least.
That's a lot of volatility.
A lot of volatility.
Okay.
So that covers the volatility complex.
Right. So how does that relate to the market?
So yeah, for sure. Now, then we have Bitcoin and Ethereum basically said, correction, hold my beer, and then shot off to
hold my scotch.
Yeah, hold my scotch. They basically shot off to new highs. Ethereum just totally ripped. I'm just so impressed by what this piece of crypto is doing right now. Bitcoin seems to be recovering. It's actually not looking that impressive, but it certainly isn't correcting anymore. So it's going to be interesting to see what Bitcoin does here. But Ethereum, man, looks just ridiculously strong.
Well, I mean, maybe this is a topic for another video, but I've read a lot in the news about how Ethereum may be a better holder of value or a better instrument for actually exchanging transactions, currency standpoint, than Bitcoin. And that at some point, maybe Ethereum may even surpass the price of Bitcoin. Yeah, so there is a lot of chatter about that. They're moving to proof of stake rather than proof of work, which I won't go into here. It's just a pretty complicated concept.
But essentially, where Bitcoin is, you have to solve the algorithm by basically transmuting electricity hash power to solve the algorithm, whereas Ethereum is using now a proof of stake. So you don't have to do proof of work. It's a much kind of less power consuming methodology. And the other thing is, it has the ability to create smart contracts on top of the crypto itself, so you can actually enforce rules when making transactions, which isn't possible.
Oh, yeah.
Quickly or
Now,
easily
although I
on
don't
Bitcoin.
understand technicalities behind that, I do understand the fact that if you want to buy and sell something, especially if it's worth a lot of money, you probably want some type of agreement to go along with it. So,
For sure.
yeah, I
And
mean,
I'm not claiming to be a crypto expert. I probably butchered some of that there. So if you any crypto fans, don't hate us. We just
yeah, please don't.
we're
We're more of stock people,
watching
not
all
really
different
crypto
things here.
people, but we got to follow crypto. It is a new asset class.
Yep, for sure.
Without a doubt. It's going to be decentralizing and changing the industry for sure.
Yep.
All right. So what else we got?
I want to talk about uranium. So
Okay.
uranium is at an interesting juncture. This is Cameco. This is just the major uranium miner in North America. They're Canada-based, but you can get them on, the U.S. Stock Exchange. Now, the interesting thing here is I'm always trying to find catalysts for uranium because it's my favorite commodity. Now, what happened recently was that a company called Sprott took over this other uranium holding company it's called Uranium Holding Company. But basically, so they buy physical uranium and hold it, basically hoping that the price of the commodity goes up. And when it does go up enough, they will sell that commodity on the market. Uranium commodity market has been very opaque. No one really knows how it trades. There's not a lot of visibility in how things go. But with this huge multi-billion-dollar company coming in, taking over what was fairly unfollowed commodity for quite a while and taking over what is a major player here, they are now what I think it could be a potential catalyst for essentially a large player to start soaking up any remaining inventory, which will eventually drive the price up of uranium such that new mines can finally be brought to market. And those mines will not go to market until they have something like $60, $70 uranium. Uranium's at 30 right now, roughly.
So isn't that sort of like price fixing? Can they do that?
No. So in a way, that's funny actually.
I mean, it sounds like price fixing to me. Like, it sounds like they're just going to be like, lol, we're just not going to sell anything until they pay us what we want. Like, come on, that's not how it works, though. Other people...
No, are you kidding me? That's totally how it works. That's how it works in just about any commodity trader. There are people who, in the oil market, actually have storage tanks that can receive delivery and then resell that oil at later dates to capture spreads in the market. Uranium, I think, has a longer shelf life than oil, so they can do that for a much longer period of time.
Interesting.
Yep. So it may just be a blip on the radar, but I do really try to follow the uranium market closely. And so I found this interesting because you have like an actual big player potentially opening up this market to other big players by taking over this trading corporation. Yeah, so that's me for the week, man. That's what piqued my interest. But obviously there were tons of earnings this week. Jeff, I mean, I know you've been watching that stuff pretty closely. Like, lay it on me, man. What's happening?
So the bottom line is just ridiculously positive earnings across the board on some of the biggest companies in the world. Microsoft's up. Amazon is just killing it with their revenue. Apple had a blowout quarter, just beat earnings expectations like crazy. And Microsoft, I thought on their business to business side, just performed really, really strongly. And then Google just killing it with the advertising. I mean, overall, it was just super, super good. And I know you brought this chart up here, which is one of the charts I requested, which is basically a consolidated look of the biggest companies traded on the S&P/Y, which is Facebook, Apple, Amazon, Google, and Microsoft. I thought this was an interesting trend to watch, where you're kind of looking at a consolidated chart of all those companies valued together on one candle chart. It's interesting because it almost looks like it's starting to top out on your momentum, and it's almost looking like and which is interesting, right? Because the SPY looks like it's topping out as well.
little bit.
So I feel like if you watch these 5, they kind of indicate the flow of the SPY. And it makes sense because they hold big percentages of the index.
So yeah, so this is actually an interesting point. I don't know how many viewers would know this. The S&P 500 is not an equal weighted index. It's actually a market cap weighted index. And that means that these 5 stocks, they will have the largest percentage compared to the bottom, 500 or like 300 something. They have like way more than that. So if anything happens to these guys, then so the rest of the index will go.
Yeah, so it's cool to watch that for sure. Now, one of the companies out of these ones that I really wanted to look at was Facebook. So maybe we switch over to a Facebook chart real quick. Awesome. Wow. Dude.
Yeah.
Facebook is just killing it. So why I wanted to bring up Facebook is because out of all of these stocks, if someone was to ask me which one I felt had the most potential for future growth, I would have to say Facebook. And you may be like, hey, wait a minute. They've got 2 billion plus users. Literally a quarter of the planet is using Facebook. Like, that's ridiculous. Okay? That's ridiculous. Now, despite that ridiculousness, why would I say that? I'm going to tell you, it comes with one important thing. That's virtual reality and augmented reality. They are spending billions and billions on I feel like I'm Trump right now. Billions and billions. But literally they're spending so much money on this stuff. They bought Oculus, the Oculus Rift, right? That VR company. So they were some of the forerunners of this whole technology. And if you're not into VR and you don't really follow the potential of what it could be, most people think of it as kind of like a gimmicky thing, right? And it is for the most part nowadays kind of gimmicky. But there's a lot of interesting things you can do with VR when it comes to the business space of it, for sure. But when the consumer side of things is where Facebook is really trying to hit mainstream with their Oculus Quest 2, which, is a completely wireless, completely hands-free setup. Nice. It does inside-out tracking, which means it's got cameras all around that track your environment for you and your hand movement as well, with your hand sensors, all in one system. It's not complicated. Not like some of the systems out there where you got to set up laser sensors and they scan your whole room and you can do all your craziness that you want to do. Oculus Quest is not like that. Now, one of the interesting things that they've done in the past couple months is they've made it mandatory to have a Facebook account to use the Quest.
Ooh, evil corporation.
Why do you say that? It's funny.
God.
Trying to track everything you do, right?
Yeah, man. I feel like I have to take a shower now.
That's funny. I mean, okay, yeah, there is a lot of stuff to be questioned when it comes to like the privacy, right? Now imagine this. Imagine if you wanted to get and communicate with your family or whatever, and you all decided to communicate using Quests in VR through Facebook, where the system would automatically generate avatars for you in a virtual location that it scanned using the headset that was a mimic of your very own room that you were standing in.
Yeah, that's... Man.
Okay. The potential is crazy here. Like when you're talking about the concept of virtual workspaces, of virtual meetings, of being able to talk with somebody, actually have hand signals, actually have something that does face tracking eventually, I'm sure they will, where they can track your lip movements and eye movements and things like that, and kind of manipulate objects. Instantly snap your fingers and have a presentation show up on the screen. Or guess what? I can just throw a document to you and you can grab it. And now all of a sudden it's in your memory banks on your system and you can pull it up whenever you want and actually sit there and read it in virtual reality. Like there's a lot of potential here on this market. And the thing is, as the technology improves, as it gets more accessible, it's just going to get adopted faster and faster. And that's one of the benefits that Facebook has.
Facebook has already been caught reading our faces, our facial expressions off of our cameras on our phones without any notification whatsoever. It's just by simply having the Facebook app on your phone, you have had your likeness captured while reading different
Like ads.
articles or anything like that. Well, but here's the thing. So imagine a virtual workspace where you're talking about what is essentially intellectual property, or sensitive material or personal material in the case of the meeting with your family. They're now going to have a line into that, right? And we were already seeing some issues with that in terms of using Zoom for virtual meetings and other environments like Slack and things like that. The security concerns are huge, yet the data that's gathered here to help predict and sell stuff to us and things like that. Facebook has already they already have a few black marks on their report card here, and so it's a pretty unnerving thing to think about what they could do with that data. Like, they already know when you take a dump. You know that, right? They can tell. No, seriously. They can tell when you're about to, they can anticipate when you take a dump because of the way you interact with your phone. They can basically give you a kind of a heat map of the time of day when you were most likely to take a dump.
Yeah, trust me, I'm super unpredictable. Yeah.
Say what?
I'm super unpredictable there.
Yeah, I've heard stories.
All those protein shakes. But seriously, like, Facebook's marketing, okay, fine. Yeah, maybe privacy is an issue. Maybe, there are concerns there. But from a investor standpoint, from a profitability standpoint,
well, it's a good story.
Yeah, exactly. There's no denying that it works, man. It works.
True.
They can sell shit. Their Facebook ad program, the amount of real estate they have on Facebook, where it's just the perfect amount, doesn't disturb users, but it still gets the ads in their faces.
Yeah.
But what ads? The type of ads. And as AI gets more advanced and they develop better and better algorithms to market to people, their system is only going to get even better at pushing ads and basically increasing that percentage of people who see an ad and say, I'm going to click on this.
Yep.
I'm going to check this ad out, right?
Yep.
Like, it's all about increasing that percentage, because every time you get a click, that means, we nailed that person. We got it.
Yeah.
Well, all the data that we captured on this individual, we know that that's what they wanted to see. That's what they were interested in. From an investor standpoint, I think it's something to watch out for. I think there's a very good chance that Facebook could end up being the leaders in the VR, augmented reality industry, because they keep making innovations in the technology that people just are not able to keep up with. I mean, we're not talking about enthusiast grade VR. Okay. Right. We're talking about the average user, right? The average user who's like, I want to play around with VR a little bit and maybe use it for some other things, or maybe watch movies in a movie theater while I'm on an airplane. Maybe that's what they want to do with it. Who knows? But that's the casual user, right? And that's where to watch out for, because it's getting cheaper. It's getting cheaper. Oculus Quest 2 is, I think, pretty affordable.
Right.
Like 200, I think it's like $299 for the base model.
Oh yeah, man, that's a system. That's like a
game system, right? Yeah. Probably cheaper than that now. Nowadays, what is it? PS5 is like $800. Yeah. So yeah, even less than that. It's not fiction anymore. It's something that a lot of people can use. A lot of people can take it home, play Beat Saber in their house, go to the gym, play Beat Saber, or whatever they want to do with it. So yeah. Anyway, something I think that we should look out for in the future for sure. And if you're trying to find one of these 5 companies to invest in, I would say buy Facebook. Keep in mind, it's not investor advice or not financial advice. Okay, got to have a disclaimer. We're just here to provide you some nice education and some interesting thoughts and ideas. Okay, we're not financial advisors. Okay.
So Jeff,
that being said,
what do you think for next week?
Well, for next week, I'm definitely going to keep watching the markets and keep watching Facebook a lot. I don't really have any super big targets. I did, like I said last week, I added some CPNG. I've been adding some coin here and there, trying to build my position in that. I've been watching Tesla a lot. Anything below 700, in my opinion, is a great buy, because it keeps, and that's something that if you were trading it, you could easily swing, find it less than 700, buy it, it'll definitely swing above that at some point in the future, and then you just sell it and then wait for another swing down. It clearly, in my opinion, is in an upwards channel. But I think that's time for another video. Let me know what you think is going to happen in the future with the SPY.
Yeah, man. So I think that we are still. I think we have to get through earnings. If there are any negative earnings surprises, I think they're gonna potentially hurt things a little bit more. And we're seeing quite a top in the FANG names, basically the Amazons and the Facebooks and everything. And I think that if we enter in some consolidation there, like it's really tough to say. Rest of the index would have to then support further upward momentum, and I don't know. I don't think it's there. So, and with what we're seeing, the volatility complex, maybe we're kind of at a delicate phase, I think. So I am expecting maybe. I mean, I have to admit I'm a little bit of a perma bear. I'm expecting a bit of a pullback here. I'm not necessarily too enthused about the upside, but that's why I have my straddle on. And like I said, I'm basically going to be looking for dips in Ethereum to buy, and same thing for the uranium stocks.
Tracking. So you think the implied volatility you saw or highlighted earlier is headed towards a bearish pullback?
It's at an interesting juncture.
Implied could go either way, huh?
So low, or sorry, realized volatility is so low relative to implied that it has only one place to go, and that's up.
Sounds good. Well, I guess we're going to call it here, guys. We're trying to keep these market wraps short and sweet. So hope you guys enjoyed this. Please like and subscribe. We got a lot more interesting indicator videos and strategy videos coming your way. So please keep on the lookout. Subscribe to our channel. Put on the notifications. Hit that notification bell so you know when we got a new video posted. Because, our whole thing here is all about strategies and trying to help you formulate the best strategies for your trading or investing. Thank you for your time.
Cheers, guys.
Cheers.